This is the Money GPS, and I want to welcome you to get what you're looking for right now. You came here for the truth. I've got an extremely interesting video to get into today, some real different stuff. The first thing we are going to look at is the worst call ever. Yes, that's right. There are always forecasts of this or that, but they generally don't turn out the way that they had planned. And this one is definitely the worst. I assure you already know what it is. The second thing we are going to talk about is the slowdown that's happening today and what that means for the economy as a whole. And then the third thing we need to look at is the future. What does it have in store for you specifically? All of that and more. Let's begin. I really wanted to start with this here because it sets the stage, it sets the tone for the rest, because it's so obvious. It was so clear to both you and I, and yet now there are articles and interviews about all of it, and we're talking about the Fed and how this nonsense of transitory is finally being put to rest. In this interview here, I'm just going to cut to the chase and give you the good stuff. The Federal Reserve Chair Jay Powell has said that he will retire the word transitory. It sounds like you're saying that those words shouldn't be used at all, period. Yeah, I've been saying this for months. The characterization of inflation is transitory is probably the worst inflation call in the history of the Federal Reserve. And that is true because they denied it and denied it and denied it. And yet they knew exactly what was happening. It was not, absolutely was not a surprise to both you and I. We knew what was happening. Now, here we have it today saying, okay, we're going to put that to rest. And in the coming days, on Wednesday, depending on when you see this video, most of you will see this on Monday. Wednesday is the big day, the Federal Reserve meeting. As of right now, as I record this video, the futures, they're looking strong. It looks like the stock market will rise. On Wednesday, possibly a different story. So let's keep a close eye. Now, I want to shift gears. Look at this. There are three lines on this chart. The bluish type line is the reserve ratio for major banks in China. And if I get my highlighter out here, I can give you a little look at what this is. Essentially from 2004 up until the peak right here in right around 2011, this was going higher and higher and higher. They were worried, concerned about different factors. We don't know what's going on internally, of course. But ever since then, they've been reducing that. And so these numbers are very important to note simply because the amount of money being extended into this system, specifically with China, is, some say, one of the top indicators to look for because that reverberates throughout the economy. And you think, what does China's money supply and the amount of loans that they're giving have anything at all to do with what happens in the UK or Australia or Canada? Why would that affect the economy? Well, we got to understand that you look at the amount of commodities, the amount of products, the consumption is unlike anything else. Okay, both exports and imports are extremely important to focus on for a country like China. And that's why when we look at the credit impulse in a few minutes, it highlights all of that. This is just a reserve ratio, but we'll connect it all together. Okay, so just give me a second here to look at the next thing, the commodities spot index. Now, this has declined from its peak. Very clearly, we see that. And I'll show you another commodity in a few minutes. But the trend has definitely been up along with everything else. There are many who will suggest that, oh, I am, talking about bearishness and I'm talking about, I'm always negative and all this. I've been talking about commodities and their rise, by the way, faster, much faster than the stock market. But I guess that's besides the point. It's important to focus on what the trend is, not the trend of, yeah, let's buy tech stocks and Amazon stock because it always goes up. Not necessarily the case. Okay, I'm going to show you Amazon in a minute, actually. And you can see the difference, why we should be paying attention to China and also the US and every other country. But look at what's going on in China. China versus the US banking assets. Absolutely skyrocketing. And this has happened year over year over year. Yes, there have been blips along the way, but the pace of that acceleration is much faster than what's happening in the US. According to this, $52 trillion versus $21 trillion. So a huge disparity growing, and it's growing even faster. Now, that's not necessarily a positive or negative thing. It's more likely a negative thing because you don't want things to grow too fast. When that happens, you have instability. And as soon as this declines, it becomes a huge shock to the system. And that's why we need to pay close attention to the China credit impulse. Extremely important indicator. Something that I talked about back in, I think it was April, initially to warn that this was starting to come down. You could look at it on this chart. The chart's not detailed enough to get into the month, but we see that right here. And it happens to correlate entirely. That was base metals, by the way. This is the China credit impulse. They correlate quite accurately together. So that to me just tells us that we need to watch out. We need to watch out. Look at this every single time. Every single time. Okay? Very important. Very key. The same general trend. They're not going to be, matched perfectly in this instance here, but the trend was down. And now what's happening? The exact same thing. This just shows us that we could be in for some volatility, to say the least. Where's it going to come from? What's going to cause it? All that we have to only know as time goes on. Take a look here. China vehicle sales fall for the 7th month in a prolonged chip shortage. They can blame the supply chain problems and all of that. Certainly this is a factor, but there is so much more going on today. Connected in with that, Volkswagen CEO fears chips will be in short supply for years to come. Daimler chief says shortage may not be resolved until 2023. So this problem extends out beyond one company and beyond one country. Supply chain issues, issues at the ports, issues with the truck drivers. But underneath all of that, I discussed it at the beginning, what the Federal Reserve is up to and what the government is up to. Anybody who points, oh yeah, QE is nothing, QE is this and that. We need to understand it's not just about what the Fed is doing. That's one factor, the Fed. But what about the government? They're pumping in trillions of dollars, infrastructure plan over here, a relief plan over there, emergency assistance over there. That is inflationary. Call the Fed's actions what you want, okay? But what the government is doing is absolutely inflationary. Oh no, it's all paid. It's all paid for. They literally, people believe it, I guess. Some people believe it. Now this is important, and I want to know your thoughts. Anecdotally, my 22-year-old son walked into my home office. He just got a haircut. He said that they raised the price from $20 to $26. When the barbers start raising prices, you have to worry about broad-based inflation. And I started to think about this for a moment. A barber, it's a service. There are products used. I mean, if they're washing your hair, maybe there's some shampoo, and I don't know, maybe they gotta clean the blades with some product or something. And maybe they're using electronics, which need to be obviously, utilizing energy and so on. But come on, it's not a heavily intensive, input costs. It's just the employee, and that might be just a single person. But if the barber, the hairdresser, is increasing their prices from $20 to $26 in this example, that is a considerable jump considering what this particular industry does. And so broad-based inflation, price inflation, forget about, oh, there's no inflation today. The bond market tells you so. Totally different scenario. The amount of money, if you go, please, I've heard from literally thousands and thousands of comments telling me, this price went up on me, this price went up on me, this price went up on me. That's inflation. That's price inflation. Okay? A symptom of, in my opinion, what central banks are doing and what governments are doing. But you're only going to see that as time goes on. You don't just, where you are in that given day is not going to make sense. You've got to track it over time. And I want to know what you think of that. Please let me know in the comments below, okay? Now, this right here, investors have been putting their money in since March of 2020. They saw this dip and they really took advantage of it. Stocks have risen since. But I found this interesting. I was searching for Amazon because I wanted to look at the stock for this video. And I saw this. I scrolled down on the InQtel funded search engine. Oh, did I trigger the algorithm? Okay, here we go. People also ask. So I just typed in AMZN because I wanted to see the stock over a period. I was going to talk about that, but then I found this is more interesting. This is what people are searching for. What is a good price for Amazon? Already, I can go 10 minutes of a rant on that. Number 2 was, what is Amazon? So people are seeing AMZN and they're starting to search out, what is this? Like, you don't even know what it is, but chances are these people are already throwing money at it. Is Amazon safe to invest in? What is NEO's price target? So these are the retail investors. And it's okay that retail investors want to invest, but you've got to do more homework than to simply, a quick search. What's a good price? Who are you going to ask? Who are you asking? This is dangerous. So we are going into the euphoric stages right now. Speaking of euphoria, look at what's going on with commodities. I've highlighted this many times before, but you can see, all right, that was steel going up like crazy. In fact, pull it back even further. It's been a wild ride up and down, but look at that, down significantly. Now it has perhaps bottomed out at this period. We'll see what happens, but it has come down hard. A lot of these commodities, some of the metals have come down quite a bit. And then you look at the opposite end of the spectrum with lumber coming down and now rocketing higher. So watch out, watch very clearly in what happens, okay? And then 2 quick things really fast. This is talking about inflation. We bring it full circle again. Unfortunately, the previous rate hiking cycles have all ended badly. Every single one. You could see that through time. If they hike interest rates, it ends badly. That's just the way it goes. And the problem with it, if they had started earlier and started to pull this back earlier, they could have softened the blow. But they never do that because they create the boom and bust cycle so that when asset prices fall tremendously, their friends buy it all up. Warren Buffett goes in, swoops in with $180 billion of cash and starts buying everything left, right, and center. The retail investor doesn't do that. A 20% or 30% dip in February to March 2020, that's when retail investors get in. But when markets come down by 60, 70, 80, 90% for some stocks, you got the big boys coming in because they have that reassurance that this can go on. But the average person doesn't know what the tomorrow has in store, right? And then last but not least, DHL doubles robots as humans alone can't handle the holiday crunch. Humans will be replaced by robots. I'm going to say it and say it again and again. And that's just the way it is. Not every job, not right away, but this is happening one by one by one. The robots are coming for us. So we got to be aware of that. And we got to have our skills in line right now. We've got to have our own food supply. We got to have our own energy if we can. We got to take these steps because we are being pushed out. That's a simple matter of fact, all right? That's it. All I wanted to say for you today. I tried to bring it full circle. I hope you appreciate that. I hope you appreciate what I've done here, trying to change the camera angles and everything to make it a little bit better. A lot of people were complaining that too close. Now I'm further. Things are working out. I got, this camera isn't choppy. The previous one was like a little bit choppy and stuff. I'm trying to do my best for you to bring that information. If you want to support the channel, simply hit that thumbs up button. That's all I ask. Just click that one button. It's right down below. If you haven't seen this video yet, you definitely want to check it out, all right? Just click it and I'll see you there.